Hey everyone, welcome back to Corporate Decoder, the place where we sift through corporate filings so you don't have to. Today we're cracking open the latest report from AtlasClear Holdings and what a doozy it is. Let's just say their financials are a bit like a roller coaster full of ups, downs, and a few loop-de-loops that might make you queasy. AtlasClear just released their quarterly report and the headlines are certainly attention-grabbing. While they've managed to generate revenue, they're still wrestling with significant losses and a precarious financial position. Let's dive into the numbers and see what's really going on. First, let's look at the balance sheet. They're reporting around $6.9 million in cash and cash equivalents. That sounds like a decent chunk of change, right? But keep that number in mind as we go through the liabilities. One of the biggest items on the liability side is payables to customers, sitting at about $20 million. Basically, this is money they owe to their clients. And when you add up all the short-term debts and obligations, their total current liabilities come out to a whopping $37.7 million. So compare that to their $6.9 million in cash, and we are looking at a big hole in their finances. Digging even deeper, their total stockholders deficit is around negative $23 million. That means they owe more than they own. This is a critical point because it paints a clear picture of the financial strain AtlasClear is under. Moving on to the income statement, their total revenues for the last 3 months were about $2.7 million. That income is from vetting fees, clearance fees, and commissions from brokerages. That is a big improvement from the same time last year when they had zero revenue. But on the expense side, they spent almost $3.9 million. A big chunk of that went to regulatory and professional fees at $1.1 million. So when you subtract the expenses from the revenue, that leaves them with an operating loss of $1.1 million. Now here's where things get interesting. They have other income, mostly due to changes in the fair value of some complex financial instruments totaling around $644,000. After factoring in all income and expenses, AtlasClear is reporting a net loss of about $420,000 for the quarter. Not exactly a stellar performance, but a loss nevertheless. Now let's zoom out and take a look at the 6-month numbers. For the 6 months ending December, total revenue was about $5.5 million, which again is entirely from this year since they didn't have any operating business this time last year. But their total expenses were much higher, coming in at $7.6 million. Regulatory and professional fees over the past 6 months were $2.2 million. That puts their operating loss at $2.1 million. However, they do have a huge boost from other income totaling $12.3 million. This income primarily stems from the change in fair value of financial instruments. All things considered, the company reports a net income of $10.3 million. But remember, it was driven almost entirely by those gains in financial instruments. The real business side of things is still losing money. The business itself are to build a financial services firm that is enabled by technology and with evolving innovative fintech products that focus on financial services firms. Basically, a platform to power innovation in fintech, investing, and trading. In February, AtlasClear bought a proprietary trading platform to add to their services. The SEC form makes it clear that AtlasClear is a smaller reporting company and is an emerging growth company. It really makes you wonder about where this company is going in the future. As of February 18th, 2025, there were about 1,200,711 shares of common stock issued and outstanding. It is important to note that AtlasClear has to make a lot of assumptions about things like cash flow estimates. These things could make the books different than the actual business. The company had a profit as of December 31st, 2024 of $10,328,343. The fair value of a non-redemption agreement increased by over $1 million. So the liability grew a lot over the reporting period. Scroll DUSCARP liabilities scale equals sign 0 inches unit ref equals sign unit underscore standard underscore USD underscore XQ2 DYP 3 IGK ski L E6 QZ8 DP2A 79,211 367 sit non fraction. The company currently holds 79 million in liabilities. Let's talk about warrants, which can be a bit of a wild card. These are basically options that allow investors to buy shares of stock at a specific price. AtlasClear has two types of warrants, public warrants and private warrants. The public warrants are considered equity, but the private warrants are classified as liabilities. And now for those derivatives, Minius convertible notes. A derivative is like a financial side bet whose value changes with the price of something else. Since it is a liability, AtlasClear has to account for every swing in the value, and these can be quite volatile. A single change in the valuation swings from negative 61,531 up to 823,076. One final thing to consider is AtlasClear's derivative liability as it relates to warrants, which is another liability of 123,062. They also have an accrued contingent liability, which is a fancy way of saying they're setting aside $100,000 for a potential future loss. Looking at the notes, the company is on the hook for up to $20 million in share of common stock for some of its stockholders, which is a huge hole in its equity. There are ongoing proceedings and commitments related to Wilson Davis's legal obligations. They also have requirements to hold large deposits for brokers and clearing organizations. They also discuss potentially acquiring Commercial Bancorp of Wyoming. There was an at-the-market agreement entered into in February. At the market means that the transaction is made at the market price rather than pre-agreed amount. In 2025, the market price will affect fair value on convertible notes. There are also some non-cash transactions that affected shareholders' equity. It seems they are still working on this potential merger, but it might get cancelled. So, what does all this mean? AtlasClear is at a crucial juncture. They're trying to build a next-gen financial platform. They might not have enough money to keep the lights on, which might be needed to curtail their operations and to reduce expenses. Here is my take. AtlasClear is at a crossroads. The core business is generating revenue and growing. The debt obligations are huge and the company needs to prove it can handle them. It will remain highly speculative until the debt is under control or the company delivers a product that is in high demand. I see a downward bias. The company and its executives are on the line for making sure the company is following the laws. Thanks for watching. If you enjoyed, please subscribe, like, and comment.